Hey, strategic wealth preservation followers, it's Chris Vermeulen from thetechnicaltraders.com with your technical take here on precious metals, gold and silver, looking at the short term, and we're going to look at the big, long, monthly term going back several decades of what these chart patterns are telling us going forward here. So if we take a look what we're expecting here in 2022, let's just look at the daily chart here of gold. Now, really, since March of last year, we've really seen the market trade sideways. It's had some pretty big range-bound movements here, but it's been very random, very sporadic, not really a strong trend other than a sideways consolidation. And at this point here is really still in the middle of its range and not a lot of insight of which way it wants to go. Now, if we were to zoom out a little bit further and go back, say, a year and a half, we can see here we've got lower highs. We're starting to get some higher lows, but really the market continues to be consolidating. If we zoom back a little bit further and go back to see the 2011 market top here, you can see we fell out of favor with this topping phase, or this consolidation, which ended up turning into a topping phase, a multi-year base. It's been rallying up. We hit some new highs, and now we're in another consolidation phase. And the question is this a consolidation phase, or is it a market top? Now, if we were to look at the 50-day or 50 and 200-day moving average, you can see during a strong trend, the 50-day, the blue line, is above the green 200-day line. And when things start to crisscross and you start to get choppy price action, this is a sign that the market is struggling. It's either taking a breather before it's going to go a whole lot higher. This is known as a bull flag, which is usually a halfway point. But if it breaks to the downside, then obviously it becomes a topping pattern. And so we've gone into this multi-year foundation here. We've been in the strong rally, and now we're starting to see the 50-day kind of crisscross above that 200-day, just like we saw back in 2011, 2012. We got big volatility. This is a bull flag at this point because the trend is up. It's consolidating. It should be just a matter of time before it breaks and rallies to the upside, and we'll show you that upside target here in a minute. But if it does start to break to the downside below this 1675 area, that could bring us down to a much lower level, potentially down into the 1300 zone. So we'll have to see which way this market breaks, but overall we're in a major, I think, a super cycle to the upside for commodities, and this is a bull flag pattern pointing to a lot higher prices. Now, if we just clean the charts up and we go back to the monthly chart, once this loads here, we'll go all the way back into the 70s. And more or less, gold, I like to look at gold as kind of the main barometer for precious metals. I like to focus on gold and silver mainly. And just like how I follow the stock indexes, I like to follow the SP 500 for the major kind of trends in the sentiment of investors who are investing in the stock market. For the precious metals, I like to look at gold for that. And so I kind of look at the gold chart here, and we can do a bunch of Fibonacci extensions, ways to get targets on price going forward. Now, overall, if we were to take this low from back here in the 70s, use Fibonacci extension to the upside. So you're using the low and the high, and then you come all the way back down to the lowest level over here. That's going to tell us where our upside target is going to be. And if we carry that across, you can see the market had rallied up and then consolidated. It took a long time, decades, to finally fall enough out of favor that people wanted to slowly accumulate again. It came all the way up. It hit the 618 target. And the way technical analysis works, the way I see it with the Fibonacci extension, if you tag the 618 extension and pull back and consolidate, you're generally going to hit that 100% measured move, which was the high that we saw in 2008 for gold. And then from there, it pulled back. And in fact, it actually had a perfect measured move on the pullback. If we go down from these lows up to these highs here, gold pulled all the way back down to the 0.38 and the 0.5, right in between there. That's a healthy pullback. Any deeper than a 50%, it starts to do damage to the chart. So gold had a really nice pullback, and then it took off, and then we can measure where that next upside move was. And so if we take that and we measure that forward, we can go from the low to this high up here and this low and carry that forward. This is the next kind of major 100% measured move. And so what happens is we ran all the way up, we hit the 618, we had a sharp pullback, it came all the way up, hit that 100% measured move, and this is when we got into a major cycle top in the precious metals market, and that's when you get into a euphoric phase, very similar to what happened over here, where price just goes ballistic. Everyone is selling their jewelry on the radios, where you hear ads. Everybody wants to buy your gold, and it'll just drive price. Everyone, the general masses pile into precious metals, drive the price well beyond the 100% measured move, and then it consolidated. And that's usually the sign that the market is going to put in some type of topping phase, and that phase is probably over, which it broke down. And then we've come into this multi-year basing formation, very similar to this one, except for this one's only 6-7 years versus decades, but it's the same theory. Now, if we carry that forward to where we are today, we can get an idea of where this next move is going. So if we were to take Fibonacci extension, we go down from these lows up to this high and down to this current low. We can figure out where those upside targets are going to be for gold. You can see the 618 is at 2,322, so somewhere in that range we could see a first rally, then some type of quick pullback and pause, and then we should see it push up into that 2,700 mark going forward. And if we are to take a look using Fibonacci retracement to get an idea of where gold could potentially pull back, if we take a look at gold, gold has come down twice and hit the 0.38 retracement. Hit it over here, rallied up a bit, bounced, came back down and hit this level again. So hopefully gold is going to find traction here. Now this is the monthly chart. Each one of these vertical bars here is a year. So we're looking for this to potentially take, a year or two to potentially get up to this level. And if we get into a euphoric phase, we're going to not only see gold hit this 100% measured move, but it should blast past that. You can see here gold ended up moving dramatically past the 100% measured move. You go into a euphoric phase, you never know how high something could go. It's more or less a bubble phase. So we saw it, shoot another 32% above that target. Obviously, that was a pretty big run from the lows over here. It was a 175% rally. So there's a lot of upside potential in gold based on where it is right now. We're looking at, a 50% move in gold, and then it could blow way beyond that and go a whole lot higher. So that's kind of what we're looking for gold. We want to really see it hold these support levels and eventually start to break into an uptrend. We want to see rising higher highs and higher lows, but at this point we have a series of lower highs and we do have some higher lows. So it has mixed signals right now. We're waiting to see which way it's going to break out of this pattern. Just to kind of draw a bull flag pattern, this is the bull flag. Bull flags are usually a halfway mark. If it was to pan out, we would see this go up and have a very significant rally. Here is this bull flag that is flagging out right now, and we really need to see this start to break above some of these previous highs and start to make some higher highs, higher lows, and then we should be off to the races for a pretty big move. Now, if we're going to go back and take a look over at silver, let's go take a quick look at the silver chart on the daily time frame. Definitely has been struggling. If we zoom back a little bit here, we got the 2020 COVID kind of lows here. Market rallied up, and it's really been struggling, silver. It has been holding up a whole lot better than gold, though. Gold has been flagging down, making lower lows, lower highs for a long time. Silver actually keeps kind of holding its ground along this $22 level. We're back down at that area. If it breaks this and actually has some confirmation down there on a weekly close and starts to pick up speed, we could definitely see it unwind a lot more down towards the 18. But overall, the big picture for silver is still to the upside. So let's jump over to the monthly chart real quick. And we'll go right back to back into the 70s here. And more or less, silver trades a lot different than gold. It's a very, very volatile move. It actually trades a lot more like natural gas when they have major cycles, major kind of super cycles to the upside. Obviously, very explosive bubbles that fizzle right back out. And silver is, I think, setting up for something very similar to that. If we were to just look at this chart here, and let's just grab a Fibonacci extension. We'll go down to the low over here. Eventually it rallied up, had its own mini bull flag, a euphoric phase up here, and had a correction. You can see that next measured move was somewhere around 26. Now, it ended up getting into one of those euphoric blow-off tops where everyone piled in. This is when gold was also on the radio. And of course, it rallied. It almost doubled in price from that level going forward. And so silver is really volatile. You can get some explosive moves. Some of the biggest percentage gains happen in the last 10% of a trend, of a move. These straight up bars right at the end. You can see over here it only took 3 or 4 bars, and it did majority of the move. So that's kind of what we're starting to set up for again over here. If we were to just zoom in this closer chart and use Fibonacci extension, we can go off the lows here after this multi-year kind of out of favor cycle, and we go to the high, we go down to this low. We can see the next upside measured move here for silver is up to around the 618, which is 32, maybe almost $33. Could get a pullback. We should hit that 100% measured move, and if it does get up here, we're probably going to see one of those euphoric phases. Gold's going to be going ballistic. Silver should blast through it and take off. And in fact, this pattern here, I was running some numbers earlier, it's actually pointing all the way up to $76 an ounce if this pattern was to do kind of a repeat of what we've seen in the past, where we've seen silver just go absolutely parabolic and take off. So there's a lot of upside potential in gold and silver, but I do think these are multi-year cycles, and I think we're going to it's still going to take a year or two for these to unfold. But I do think most of the downside has been taken out of gold. The only big question is, if the stock market goes into a bigger correction over the next few months, it might pull precious metals down, and we might get a big flush out low, a lot like what we saw in the COVID crash here, where we saw a very sharp percentage drop. We saw silver fall almost 40% in 2 months, and there's potential that we could see silver break down below this 22, maybe go down to 18 or 16, but I do think it would be a very quick crash, because the stock market, everyone would be liquidating positions, forced liquidation, short, all kinds of margin calls, and then it'll rebound very quickly. So I do think we've got good upside, but it might still be a long time, several more months, and it might be a really choppy bottoming formation as it tries to work things through here going forward. So anyways, that's my view on precious metals going forward. I am bullish on them long term. I own a lot of physical metals myself, but this is a long-term game. I'm buying it to kind of hedge against inflation, to have an extra physical asset versus currencies. And I do think there's going to be a time when I will want to sell some of these and trim positions, and then wait for things to come back down and reload again. But we're nowhere near a bubble phase yet. I think we got a lot to go, and I think the good times are not too far ahead. Somewhere in 2022, I think we're going to be seeing some pretty exciting prices in silver and gold going forward. Anyways, I'm Chris Vermeulen from thetechnicaltraders.com with your strategic wealth preservation update. Take care. Bye-bye.